Welcome to Talk Tickers. We know you're busy, so we get straight to the point, breaking down today's key earnings calls.
And today, it's Ooredoo Group's first quarter for 2025.
Exactly. We're going to dive into the numbers, the strategy, basically give you the essential takeaways you need.
Okay, so kicking things off, Ooredoo showed a, pretty solid start to the year overall.
Solid how? What are the headline numbers?
Well, revenue saw a 3% bump year on year.
Yeah.
That's if you take out the impact from exiting their Myanmar operation.
Right. Got to adjust for that. So where did the growth come from?
Mostly strong performance in Iraq, Algeria, Tunisia, and Kuwait. Those markets really drove it.
Okay. And what about profitability? EBITDA?
EBITDA also grew 2% on that same comparable basis, and they kept a strong margin, 43%. So pretty healthy there.
Good margin. Okay. Top line, operating profit up. Bottom line, net profit.
Net profit actually increased by 5%, landing just under 1 billion real.
Oh, decent jump.
Yeah, but there's a catch. That figure includes the first hit from the new global minimum tax requirement.
Ah, okay. So adjusting for that.
Well, if you look at it on a normalized basis, taking out a foreign exchange effect from Myanmar back in Q1 2024, net profit was actually down 4%.
Okay. So a bit more complex than the headline numbers suggest.
Exactly. Some underlying things moving around.
And I heard they changed how they're reporting things this quarter.
They did. Big change, actually. Starting now, they're reporting separately for their data center business, which they've rebranded as Synthes, by the way.
Synthes, got it.
And their Fintech business.
So splitting those out, that probably signals they're becoming pretty important pillars for the group.
Absolutely. It shows the strategic focus there.
Okay, well, let's dig into those then. Start with Synthes, the data centers. How did Q1 look for them?
So Synthes pulled in 35.2 million reals in revenue. EBITDA was 13.4 million.
Okay.
And what's really interesting, almost 65% of their data center revenue in Qatar came from hyperscalers.
Wow, 65%. So the big cloud guys.
Exactly. The Amazons, Microsofts, Googles of the world shows really strong demand from those major players.
That makes sense. And they're expanding capacity too.
Yep. IT capacity increased by 25%. Clearly indicates that demand is robust.
Sounds like they're leaning into a high-growth area. Didn't they bring in a partner too?
They did. Iron Mountain took a minority stake in Synthes this quarter.
Iron Mountain, okay. That brings expertise, I imagine.
Definitely. Expertise in scaling these kinds of operations, potentially opening doors. The plan is pretty ambitious, deploy about $1 billion in investment eventually.
$1 billion, wow.
Yeah, aiming for 120 megawatts of capacity long term. That's a serious scale up.
Where are they operating now? How many centers?
Right now, 13 active data centers. They're spread across Qatar, Tunisia, and Kuwait. And there's one more under construction.
And are they full?
Pretty much.
Yeah.
Occupancy in the existing ones is at 99%. Super high.
So they definitely need that new capacity they're planning for this year and next.
For sure. They're working on adding incremental capacity.
Okay, let's switch over to the fintech side. How did that perform?
Fintech generated over 22 million rials in revenue. The main driver there is international remittances.
People sending money home.
Exactly. Just in Qatar, they're processing over $6 billion in transactions. That gives them about a 20% market share in that international remittance space within Qatar.
$6 billion in Qatar alone, that's significant. So Qatar is the powerhouse for fintech right now.
Pretty much. The profits they make in Qatar are basically covering the losses in the newer markets.
Like Oman.
Yeah, Oman is a good example.
Yeah.
It's still in that build phase, requires investment.
Makes sense. How much are they spending on fintech expansion, FAMPEX?
CapEx for fintech was just over 16 million reals this quarter. And yeah, it focused on those less mature markets, Oman, Tunisia, Iraq, Kuwait.
What's the bigger goal there? User numbers?
They're aiming to get their active user base up to 3 or 4 million.
How?
By adding more services, tapping into their existing telco customer base, cross-selling, and expanding into new markets, partly through partnerships. They mentioned VA, PayPal, Qatar National Bank.
Okay, clear strategy there. What about the other parts of the business? Towers, for example.
Towers are mainly about getting the deals closed. The big hurdle is regulatory approvals in different countries.
Any particular challenges?
Well, Qatar is unique because apparently there's never been a tower transaction like this before. So the regulatory process is just taking longer, more complex.
Okay. And the money side? The deal with Zain Group?
The basic structure of the proceed waterfall hasn't changed, but the actual value of the payments, the equalization payments, that gets adjusted based on how much network build-out Ooredoo is still doing.
Got it. And the big cable project, CC cable and fiber?
That's moving forward. They've contracted Alcatel Submarine Networks to build this high-capacity system.
Connecting where?
The GCC countries, mainly, but also beyond, big infrastructure play.
Any progress this quarter?
Yeah, they secured Kuwait's first fiber landing point through Citra, and they finalized a landing agreement with Iraq's ITPC. So key steps happening.
All right, let's pivot to the markets themselves. How do they do geographically? Starting with home base, Qatar.
Okay, Qatar. Revenue actually decreased by 4%.
Oh, down. Why?
A few factors. Lower device sales, for one. Then there's the data center carve-out we talked about. That revenue now sits in Synthes.
Right, the reporting change.
And Q1 last year had some non-recurring revenue from the AFC football tournament. That wasn't there this year.
Okay, so if you adjust for those.
Normalized, the revenue decrease was closer to 2%. And EBITDA was actually flat, with the margin improving slightly to 53%.
Interesting. Customer numbers.
Customer base dipped by 3%. Now, it's worth noting, a competitor has shown revenue growth in Qatar.
So Ooredoo losing share?
Well, they say their mobile market share is stable, and they have a much higher ARPU average revenue per user.
Because they're positioned as the premium operator.
Exactly. They have close to 70% market share, focusing on high-value customers, B2B, the premium end. That's their strategy in Qatar.
Okay. What about Kuwait? Sounded like a strong spot earlier.
Kuwait was strong. Revenue up 1%, driven by service revenue. EBITDA jumped 51%.
51%, that's huge.
It is, but there's a bit of an asterisk. Q1 2024 had a one-off bad debt provision that hit results then.
Ah, so compared to a low base.
Right. If you normalize for that, EBITDA growth was still a healthy 13%, margin improved to 34%, and the customer base grew 2%. So still positive momentum.
Got it. Oman, you mentioned, was facing challenges.
Yeah, Oman saw a 3% revenue decrease. They pointed to high market competition.
And that hit profits.
Led to a 7% drop in EBITDA, yeah. Though the margin itself stayed pretty solid at 44%.
Any turnaround expected?
They're hoping things stabilize. They've got a new 5G initiative launching and plans to expand coverage this year. So we'll see.
Iraq seemed like a highlight, though.
Absolutely. Iraq continues to deliver. Revenue up a strong 8%. EBITDA grew 5%. Margin at 45%. Solid.
And customer growth?
Impressive. Up 9%.
Any issues there? You mentioned something earlier.
Well, yeah, there was a temporary margin dip this quarter. You had this issue where Corex, a key internet capacity provider, shut down.
Oh, that sounds disruptive.
It was. Meant extra OPEX for Ooredoo to handle the traffic, keep customers happy. Plus, they're investing now to kind of future-proof their network.
Why?
Potential new competitor coming in, Vodafone. There's talk of a 5G license award for them, maybe launching by year-end.
Vodafone in Iraq. That could shake things up.
Could. The timing is maybe uncertain, but Ooredoo is prepping mitigation plans. Iraq's a really important market for them.
Understandable. How about Algeria?
Algeria just keeps going. Continued double-digit growth. Revenue and EBITDA both up 12%.
Nice. Margin?
Stable at 42%.
Yeah.
Your customer base grew 7%.
Yeah.
It seems their network expansion and digital investments are paying off there.
Tunisia. You mentioned 5G launching there.
Yeah, they got the license and launched 5G products and services.
Impact on number.
Revenue up 4% in local currency, helped by mobile and fixed. EBITDA was up just 1%, though, again in local currency.
Why the smaller EBITDA growth?
Higher operating expenses, likely linked to that 5G launch. Margin was 39%. Customer base hit 6.9 million.
So that 5G launch means higher capex for Tunisia, short term.
Yeah, they flagged a bit of a capex peak there at the start of the year for the 5G rollout.
Okay. Maldives, what's the story there?
Maldives revenue dipped 1%. Competition, again, mainly in the prepaid market.
The profitability.
Actually improved. EBITDA was up 1%, and the margin ticked up to 55%. Seems like good operational efficiency.
Maximum base.
Expanded by 5%. And their 5G network now covers 80% of the population there.
Any specific challenges in Maldives?
Yeah, they mentioned getting capital out of the Maldives is costly right now because of foreign currency issues. So their focus is very much on profitable market share, EBITDA share, maybe not just chasing subscriber numbers at any cost.
Makes sense. And Palestine. Obviously a tough environment.
Incredibly tough. But despite the microeconomic pressure, the team managed to restore coverage in Gaza. They increased active sites by over 50%.
That's remarkable resilience.
It is. Customer base grew 6%. But the financial impact is there. Revenue down 3%, EBITDA down 4%, margin at 38%. Reflects the difficult situation.
And finally, the joint venture, IO.
IO felt the heat from increased competition. Revenue declined 2%. EBITDA down 1%.
Margin.
Margin actually nudged up slightly to 47%. And on the plus side, they've hit about $400 million in run rate synergies.
Ahead of schedule.
Yeah, nearly a year and a half ahead, so that's good. The current softness is blamed on rivals being more aggressive with customer acquisition, lower prices, higher costs to get customers. They're watching for stabilization.
Okay, quite a tour of the markets. Let's look at the overall financial picture. CapEx and financial health. CapEx was up significantly.
It was up 41% to 538 million reals for the quarter.
Where's that money going?
Mostly higher investment in places like Iraq, Oman, Kuwait, Algeria, Tunisia.
Yeah.
Upgrading infrastructure, networks primarily. That's still the main focus.
How did that impact cash flow?
Free cash flow was still healthy, 2 billion reals, but it was down 8% compared to last year, mainly because of that accelerated CapEx spend.
And the balance sheet. Debt levels?
Still looking strong. Gearing, which is debt relative to equity, is low at 0.6 times. That's below their own internal guidance.
Liquidity?
Plenty. Around 5.5 billion reals in cash and equivalents. Debt profiles balanced, long-term maturity, not much interest rate risk.
Ratings holding up?
Yep, maintained investment-grade ratings from both S&P and Moody's.
So are they on track for their full year 2025 guidance?
Seems so. They reiterated the guidance for revenue uplift of 2-3% and CapEx between 4.5 and 5 billion reals.
Is that CapEx level the new normal?
Well, the run rate CapEx for the core telco business is pretty stable, around 13-16% of sales, they say. The extra bit is for specific projects.
Like a submarine cable.
Exactly. And the data center expansion. Cable spending ramps up more towards late 2025, early 2026. Data centers are partly funded by that $500 million facility they raised about 8 months ago.
Any talk of new bonds or debt?
Didn't mention specific plans. They seem happy with their cash position and existing financing for now.
Okay, so wrapping up the key points for listeners from this quarter.
I'd say, first, watch the data center and fintech verticals. Separate reporting and the Iron Mountain investment show how crucial they are becoming. Synthes, especially, looks like a key growth engine.
Right.
Second, keep an eye on competition. Qatar, Oman, Maldives, IO, all seeing different levels of pressure. Management's responses vary, sometimes focusing on profit over sheer growth.
Makes sense. What else?
Regulatory hurdles are a factor. The Qatar tower deal delay, the potential new operator in Iraq. These add uncertainty, but could also be future catalysts.
Okay.
And finally, that increased CapEx. It hits free cash flow now, but it's clearly a strategic investment for long-term growth, building out infrastructure in key markets, and those new ventures like the cable.
Got it. That's a great summary. All right, it's that time again, our This Is Not Financial Advice segment. Time for a wild, but maybe plausible trade idea.
Okay, I've got one, playing off that big submarine cable investment.
Ooh, intriguing. Go on.
So Ooredoo is pouring money into this massive undersea cable with Alcatel Submarine Networks connected to GCC and beyond. Demand for data bandwidth is just exploding, right?
Absolutely.
So here's the slightly out there idea. Instead of focusing on Ooredoo or Alcatel, what about the companies that build and operate the specialized ships needed to lay and maintain these cables?
Ah, the niche maritime players.
Exactly. It's a picks and shovels play on the broader trend. As more of these huge subsea projects happen globally, the demand for those specific vessels could increase.
Finding a pure play publicly traded company might be tricky, though.
Definitely tricky. It would need serious digging. But it's a way to think about the downstream effects of these massive infrastructure builds. Very speculative, of course.
Love the thinking outside the box. And just to reiterate,
Absolutely not financial advice, just a thought experiment.
Yeah.
Do your own homework, always.
couldn't agree more. Well, that wraps up our deep dive into Ooredoo Group's Q1 2025 earnings. Hopefully that gave you the clear, concise insights you need.
And remember, this is just our summary based on the call. It's not investment advice. Do your own research.
What stood out to you listening in? Any questions still lingering? Let us know what you think.
Join us next time on Talk Tickers for another earnings call breakdown.